Good turnaround Tuesday, Warriors. Bran, Mary, same to you. AJ, team, how's everyone doing today? I hope good. Everyone doing all right?
Morning, Dale.
How are you, Stell?
I'm good, thank you.
Okay.
I think Ryan's going to be off today.
Morning.
Hey.
Hi, Kay. So, yesterday, an update for the dollar. Today, I just noticed that the 4-hour was being contained here, and I still think there's a chance, unless we start closing over 102, that there's another break. So that's what I'm doing today. Interesting. I haven't seen this before. I mean, I've seen it before, but not in a while. Gold up, silver down 28. What a wild day in silver. Reddit got long, Reddit got blown out. Nice trade, Reddit. Platinum back underneath the breakout. If that's an important line to you, maybe you have to reassess. What do you think, Still? That was an important line to Steve, I believe.
Yeah. We have the Fed this week and the NFP as well. As I said yesterday, anything before that for me is obviously it's important technical moves sometimes, but I'm going to take them with a grain of salt. And it's really all about what the Fed is going to tell us. I think they're going to do 25, no doubt about that. No reason to shock the market in any way, but will they tell us that it's 25 and done? I think very unlikely. On the other hand, will they walk on the hawkish path? We're going to do a lot more. Again, I don't think so. It's a very delicate balance that they're trying to hold, because they can see that the economy is starting to falter. Yes, there are on occasion some good numbers like yesterday's PMI, but overall the majority is starting to turn. And also, I was reading today the Treasury, they announced their plans for bond issuance for April to September or something like that. I can't remember the dates exactly. Initially, it was estimated at just under $1 trillion. Now they say it's going to be 1.4. So they have more issuance to do at higher rates, which is really not good. I mean, they don't want higher rates when they need to issue a lot more debt. So it's a balancing act. They would love to have any kind of excuse to stop hiking, but at the moment, inflation is dropping, but not dropping fast enough. So it's a tricky one. It's a tricky one.
Obviously, you're tricked. Don't you think?
Yeah. And as for metals, I stand by my view. I think we're going a lot higher. If anything, just from inflation itself, right? Theoretically, should be driving everything higher. We can't have prices of everything going higher apart from metals, right? The knee-jerk reaction is always to sell on good news or on rates rising a little bit, but this is just noise. And if you look at the chart of the dollar or yields going back, 50, 60 years, the dollar's been going up and down, up and down, up and down, and metals have been going up. Of course, you have spikes, like the two big silver spikes. You take those away, because those were driven by, especially the Hunt brothers one was just, we can just erase that move completely, because it was they tried to corner the market, etc. But overall, look at gold. Over the past decades, yields have gone up and down, dollars gone up and down. Gold, the long run, of course, it's going up. Same with the equity indices, right? So anyway, this is the market we have, and I think that if the Fed is hawkish in any way, then I think it's going to be an opportunity to sell the dollar. My humble opinion.
Okay.
But let's see.
Yeah. All right, Kay. How are you this morning? Finally getting a little pullback in U.S. dollar yen.
Yeah.
But the momentum is tremendous on this last move.
So yeah.
Look at that RSI reading. It's like almost, 88.
Yeah. But as I said on Friday, Ueda really bought himself 1.5 months time And I was just saying in the chat room a bit earlier today that unless he sends like submarine hints into the market that he will change in June, we at least, well, not at least, but probably will have a month where yen could be sold on rallies, because it's just going to be hard to be long yen, because the funding will bite relatively soon, because he kept the interest rate differentials where they are. So it's partially going to be up to the other currency in any yen pair to show the way. But if you look at the dollar yen itself, it stopped just around the 1/3, just ahead of 138. It's an important zone up there. But then we are already through the 200 DMA here, which is around 137. And yeah, I for the time being, I'm going to be a yen rally seller, because it's just yeah, as you say, the momentum is there, and Ueda gave the green light. Now, the one thing we shouldn't forget is that if we start to hit levels above 140 again, they may start to get a bit nervous, right, on
Yeah.
intervention or not. I don't think it will happen if the dollar yen doesn't rally more than 200 or 300 points each session or in very quick succession. But we have to not lose it out of sight, because that's where Kuroda decided to come into play with the market. So but I do think yen is going to remain under pressure for yeah, perhaps a month or so, and then we are going to start to speculate into the next Bank of Japan meeting.
Okay, any trade setup shorter term? You scalping it or?
Yeah, I'm really scalping it right now, because I don't know what the combination FOMC ECB is going to give us, and
Yeah.
then with the NFPs at the end of the week, we've been talking about what we thought about the FOMC on the Flow Show as well, if people want to have a look at it. But basically, I think he's been so well trained, Powell, to walk the fine line, that he's going to continue this exercise. Let's not forget, if they do 25 BPs, then we are going to be banging in the dot plot scenario, and he might be hinting at a pause, but he probably leave all options open now. And the famous two words, data dependence, will be probably what's coming out of his speech tomorrow. ECB is a bit of a different. It's not obvious ECB, in my opinion. They could do a hawkish 25 or a dovish 25, or I don't think there's enough food to do 50 again this time, but we'll likely leave the door open for more. But we're still going to be running a little behind the US yields, so there might be just enough of still divergence between the both of them to keep the dollar underpinned on setbacks. We've now rejected the euro dollar. We've rejected it, what, 3 times in those high 110s? It's relatively important, right?
What are you saying here? One rejected it here, counting
and then the spike,
rejection, and then here.
Okay. Yeah, okay. And then on last Friday, the end of month fixing. Okay, it's even more than 3 times. It's maybe 4 or 5 times, but it starts to be rejected above that, especially above 110.5, and I think it's interesting. It's very interesting.
I'm trying
Not
to figure
my radar. Firmly set on the ECB on Thursday.
Okay, now I know I have that horizontal blue line there. Okay, Aussie, talked about the potential that maybe Aussie was going to start holding up better than Euro yesterday with Blake, and marching to its own drummer to the upside like it was to the downside. Do you think it's just a function of risk on here?
Well, I mean, RBA surprised by doing 25 and going more hawkish again. Low just saying that they need to continue to fight inflation, where they were hinting at a pause earlier. So they are the weather vanes of the central bankers lot over there. It's difficult to to predict what they are going to do next. But we've seen with the Kiwi last time the RBNZ raised rates that it only lasted for a day, right? The impact. So I'm not sure. It's very neutral here, around 67, in my opinion. The Aussie dollar, at least.
Okay. So, any trading ideas?
Yeah, I'm buyer on dips in dollar yen and perhaps a selective cross yen somewhere. I'm finding euro yen much more difficult to trade right now into the ECB, because I've got like this little voice saying in my mind that the ECB may put in a top for the euro for now, and so it's more difficult to trade that one, in my opinion. But yeah, perhaps one or the other yen cross. Looking at oil, I don't know if it starts to hold up the 75 Canada yen, maybe a candidate perhaps.
Yeah, it's definitely filled the gap.
Hey,
We'll see.
good morning, Kman
Good morning.
and
Hi,
Dale.
Hey, Blake.
Hello. Hey, Kman, just talking about the euro. This is a question I have for you. You said you had a little voice in your head that says that the ECB may mark the top in the euro. We were just in the chat room discussing about the future rate path of the ECB. If they raise rates, which they're expected to raise rates by 25 basis points, do you expect them to stop from here, or do you still expect them to raise another 50 or maybe another half?
Well, the market has built in those expectations for another, I think, total 75, is it? Somewhere. I haven't seen the latest, might be a little less now. But we saw the financial conditions coming out, or the M3 and the money supply and stuff coming out, and it seems that the tightening is starting to bite a little bit. And I've got the impression that other data will start to gain in importance compared to what inflation is really doing in the short term. We've seen this morning the inflation data in euro, and they're sticky, even though they came like 0.1% below expectations. If you look at the headline numbers, still 7% sticky, but the euro did not respond to it at all, and that's where this kind of impression that I have is starting to come to the fore. I was quite bullish euro process for a while, as everybody in the room knows, but now I don't know. I'm starting to weigh the options to see if we are building a top or not.
It's a really and Dale, do you want me to take the charts? Or you still
Yeah,
good?
but just take one gander at TLT. Now they're coming in higher today, but this is Walsh's trade. If we get a breakdown, that's going to. How do you think everything would handle long-term yields making new highs and taking out the November low, which would mean new highs in yields? And it almost looks like, what's the opposite of inverting when yields are what's that term? Where the back end, come on guys.
Steepening.
What?
That's
Flattening,
right, okay.
flattening or steepening? What? Which
Yeah,
one?
steepening. Okay. It almost looks like that could be beginning to happen. And before I do that, Steve, do you think if that happens, everyone's been talking inversion. What happens when the inversion stops and the steepening begins? Market impact of something like that. Steve Folge, please.
That's what normally happens.
What's the market impact?
You get an indication of an upcoming recession with the yield inversion, and then this process reverses as you're going into a recession.
Okay, well, maybe that looks like a possibility that no one's talking about. Everyone's still real focused on the inversions. And I think yesterday was, maybe they, started to turn them the other way, because they look much more vulnerable than the 10-year.
It's too early. It's too early to say, though. We need to wait a little bit more to
You
see
know what?
if
It's
that's
never
the case.
too early for me because I hear the owls when I get up in the morning. Right, Blake?
Oh,
You know,
I actually have owls. They are damn predators in my neighborhood now. They'll
are
pick up
they?
little dogs and run off with them. So yeah, for
All
sure.
right, get your gun out. All right, no, go ahead and take the screen, bro.
Yeah,
I just
yeah.
wanted-
You know, going back to the whole Euro conversation. You know, we were just talking about it over here and in ForexAnalytix and in the chat rooms and just discussing it. But I'd like to dig a little deeper here because the ECB. This is the kind of interesting week because you have the Fed on Wednesday, you have the ECB on Thursday. Then obviously we have the jobs report. We're trying to navigate through all this data this week. The ECB is expected to raise rates. The Fed's also expected to raise rates both by 25 basis points each. But will the ECB continue? I think they will, but I'd like to hear from the folks on the other side of the pond, your thoughts here, because the Fed will most likely pause, and it seems like they're going to pause for a while. But you just had the RBA that we thought I thought they would. I mean, obviously that was a surprise hike last night, and I didn't expect them, nor did anybody else. Hence, the Aussie spiking higher. But we expected the RBA to continue to stay pat for quite some time. But they cite persistent high inflation. I think they adjusted their inflation forecasts even higher. And that's going to be a problem with most central banks, I think. So, it's interesting that you say, Kman, that this ECB meeting might mark the top for the euro, because look, everybody just assumes the Fed's going to raise. It's going to be one more and done. And I think the market also assumes that the Fed's going to really kind of shut the door on keeping rates going higher and put us in a kind of a holding pattern for a while. But what if they don't? What if the Fed leaves that door open in case they need to raise rates quickly again to make sure they clamp down inflation? Because I'm not 100% sure, and I'm sure most of you guys are looking around. I'm not 100% sure that inflation is necessarily contained.
I'm obviously not either. I agree.
Yeah, I mean, look at what the RBA is doing. So anyway, let's hear from you guys. And regarding the euro, and let me circle back to Kman since we start off with this conversation. Kman, so do you have any thoughts on the dichotomy between the Fed and the ECB this week?
Yeah, okay. First of all, can I say something about the steepening or the inversion? I think and Steve was I fully agree with Steve. The thing for the reason for inversions and recessions or inversions or steepening will the impact on the market may be in a short term, but then you have a longer term impact as well, and that's going to depend whether you are in a deeper or not recession. If the recession is shallow, a steepening of the curve could actually be much better for the dollar than what people may expect if it comes during a recession. I just wanted to add a quick word on that one. It all depends what kind of steepening you have. It's the same thing with inflation. It all depends whether it's good or bad inflation, and I think it's important to know what kind of impact it will have on the market. Depends on how you invert or steepen, right?
I agree with everything we said, with the exception of not believing that there is such a thing as good inflation.
Oh, okay. Okay. Yeah, that's it. We could discuss about that for a couple of days, I think. Yeah, but yeah. So for the ECB and the Fed, okay. Right. As I said, I expect Powell because he's been used for so many meetings now to walk that fine line, to continue to walk that fine line. So keeping all options open, they probably will hike 25. Then God knows what they will do later on. The ECB, it's going to depend how Lagarde will bring over. If she's got the question from one of the attendees, how she's going to react to those to this slowdown in loans and things, because there's a lot going on in the market. Talk about all those things right now, and it depends how she will react to it, because Lagarde has been hawkish up to now. But we also know that she's been dovish before. So is she going to flip or not? And that's going on that will depend a lot for the euro, I think, then going into Thursday. But if she says anything about the loans, then the market will start to shave off further rate hikes, I think. And that's where you may have the surprise then that euro all of a sudden turns south.
All right. Well, thank you. Stelios, what are your thoughts between the Fed and the ECB here? I appreciate your thoughts there, Kay.
It's a good question. I really don't think the Fed's going to do 50 tomorrow, this week. I mean, there's no reason to shock the market. Are they close to done? Or let me put it this way. Is the divergence still in play between the Fed and the ECB? I think so. Yeah. Will the Fed be cutting by 75 basis points by February that the market's pricing? I don't think so. So I think it's going to be a little bit of a, when the Fed does pause, I think they're going to stay there for longer than the markets expect. And the ECB, I think they're going to keep going for a little bit longer, because inflation is still elevated, and it is in the US as well, of course. But in the US, it's dropping at a faster pace. So the US, I think, is ahead on that. So
there's the other elephant in the room as well, Stelios, right? We now have 3 US banks that have failed.
Yeah.
Right. And we have 1 European as well.
About time.
Yeah, and I think this story is likely not over yet.
Yeah, I wouldn't disagree. So both central banks are going to be, I think, they're going to err on the cautious side, both because we are seeing some of the effects of higher rates. Remember we had in the UK the pension fund issue.
It was at the bottom of cable.
Yeah, exactly. So higher rates will have an effect on the economy, on investments, on risk taking of banks, of pension funds, of everything. So they know that higher rates are going to bring problems. So that's why I think they will always err on the side of caution, and and try to stop their hiking as quickly as they can. But with inflation up here, they just can't do that yet.
Can I and Steve,
a correction on semantics a little bit. High rates are not bringing problems. High rates are exposing the problems that 0 rates brought.
Exposing, yes, absolutely right.
Yeah. Steve, what are your thoughts between the Fed and the ECB? I want to show you guys, and real quick, I want to show you just some technicals just quickly in the euro, just so everybody can see this, which I think we're at a very, very important point in juncture in the euro technically. So this is a weekly chart, so you can look all the way back until the inception of the euro, basically, right? So you go these highs through the lows, you can see there, okay? But also if you take like the 2000, the inception, right, of the euro, and do you see the underside of that trend line?
Yeah.
Okay, do you see how we just keep tagging it? So I think it shows, in my opinion, this underside right here is going to show us how important it is that we break higher, because I think if we break higher in the euro this week, and we start breaking above these highs, technically that's a really big shift technically in the euro. I mean, if we move, let's just call it above, 112, we start making it above 112, we're probably going to see 120. Theoretically, I mean, from a technical
Isn't that
standpoint.
112.61.8 at the last wave down, Blake?
I think it is. I don't
a little
know.
higher.
I think it's a little, yeah. There you go.
23.
Oh, Ryan, you're back. Okay, cool. All right, so yeah, so we start getting above that, and you can see, the 618 previous support right here. You can see some other spike lows down here. So I would argue that somewhere down here, we start getting above these levels. You see where my red arrow is at. We're going to really start to squeeze. And then you're going to get the FOMO, like, oh shit, I need to really position myself for a bullish euro and, bearish dollar. I think you're going to really see some aggressiveness coming into the market. one of the things I need to point out regarding the euro technically, and then again, I'll go back to Steve. And then now that Ryan's here, I'd love to hear your thoughts too. Because Ryan, in case you missed it, we're talking about, the Fed versus the ECB, how you're feeling there. The other thing about technically though, I do need to point this out. The pullbacks, and this is a weekly chart, remember, the pullbacks in the euro have been very shallow. Same with the sterling too. It's not just the euro dollar that's been holding up here. The cable's been holding above that 124, 124.50 level too. So it's more of it's a dollar story, not only just a euro story, but this is where things get real, I think, for the euro. Okay. So sorry, Steve, go ahead. What were your thoughts here between the Fed and the ECB?
I think that there is a higher chance for the ECB to stay longer on the path of raising rates than the Fed. First of all, because the banking problem in the US seems to be a lot more prominent. Second of all, let's not forget that the Fed has raised 1.5% rates higher than the ECB has already done. And it makes sense because they started earlier as well, right? So let's say so far there's been a lag between the two central banks, right? So in that context, it would make sense. On the other hand, my faith in the ECB to do the right thing or to stay the course when things start getting tough is very, very limited. I think that for the time being, as I said before, there are chances that the ECB will stay a little bit longer in the hiking path, but that's a fragile assumption. I mean, it can change based on developments rather fast.
And so you really, I mean, it sounds like you have like A, no faith in Christine Lagarde, and B, you really would love to have her tan. Okay, so all right, well, and hey, I appreciate your
the latter for sure,
Okay, so Ryan, what are your thoughts? And welcome back, by the way. I thought we were going to be without you today, so it's nice to have you here, being able to chime in. What are your thoughts about where we're at with the euro and the Fed versus the ECB, and what are we looking at from?
I think for the euro, it's a bit folly right now to try and say, oh, if the Fed's more hawkish, euro dollar's going to do this, or if the ECB's more hawkish. I think you just got to rely on the text for the moment, because if the Fed do one hike, 25 pips and pause, what's the ECB got left in the tank? Maybe two more hikes, so they might get to 3.5%. The Fed's going to be at 5.25. So there's going to be a good percentage point gap between the two economies. So how do you price that into the euro, which is done nothing?
But I mean, the interest rate differential is already priced in. The question is,
exactly.
How does that interest rate differential moves from here?
Exactly. So what is going to get the euro moving based on central banks? Now, one side is obviously the Fed and the market's growing anticipation for cuts. I don't think we're at extreme pivot levels yet, but we may head that way. If we do get to those extremes, then you're going to start seeing the dollar weaken and the euro strengthen, of course. If that goes too far, that's when you start to think, okay, the market's pricing in, 8 cuts by next March. You think, right, that's too extreme. If the euro's moved up that high based on that extremity, that's when you look for the fade trade, because you think, no way the Fed's going to, do that many cuts that quickly. But for guessing where the euro goes now, you've just got to roll between each meeting and each piece of data and trade it against the text as well.
Yeah, I really.
Blake, there is also one more thing that we haven't mentioned. Staying solely focused on the rate environment is a little bit deceiving, because, for example, we have the weird situation at the moment that theoretically speaking, the Fed is, practically speaking, the Fed is still hiking rates. Theoretically speaking, they're still doing quantitative tightening, but at the same time, the balance sheet size has increased substantially, which means that they still claim to be on a quantitative tightening path, but at the same time, they're practically doing quantitative easing. And that might just be the beginning of the next easing cycle, starting with quantitative easing. Of course, once again, Powell is not admitting that they're doing quantitative easing. He gave a funny answer that this is not quantitative easing because the previous times they were doing quantitative easing, there was a specific target with it, and now they don't have a specific target, which, I mean, it's, you know, I don't even know how to characterize that. So the Fed at one hand is tightening, but on the other hand is easing. It's kind of a weird situation, right?
Yeah, it is. All right. Well, hey, we're crossing over the bottom of the hour here. We're going to pass it back over to Dale. We do have some data coming out, but it's coming out a little bit later today. We got the JOLTS, excuse me, jobs data. We also have factory orders, I think, is also coming up, a little bit later. Do you guys have any opinions on what's going to happen with the JOLTS data? You guys talk about that at all? You have any opinions there, guys?
Just keep an eye on it. We had the first move under 10 million since May 2021. So that was significant. There's lots of pieces of jobs data: Challenger, Gray, ADP. So these, the ADP, the Challenger and the JOLTS will give us an indication, perhaps, of problems with firms and where they're looking to slow down the pace of hiring.
All right. Thank you very much, Ryan. Kman, thank you for your thoughts. Steve, always appreciate your thoughts. Stelios, whatever. I'm just kidding. Stel.
You had a big troll, Blake.
Joking. Love always having you guys here. And Dale, thanks for always, guiding us through the thick and thin and ups and downs of the market. And I know you have
pleasure, bro.
Yeah, you have an interview today, so I'll pass it over to you.
My pleasure. I have never heard more effective, strongly neutral talk about the markets for 30 minutes in my whole career. Today was, huh?
I was just gonna say I'm like I feel like I'm so cold in my trading this last week and a half ever since the BOJ. I'm like, I'm not willing to stick my neck out too much.
Anyway, on one hand and on the other hand, and then when you run out of hands, well, on my left foot or the right foot, if it does that, it might do that, but it could do this. Anyway,
a bunch of wishy-washy traders around here.
That's all right.
I think we're going to be a lot more directional after.
Well,
tomorrow.
no, that's right.
Tomorrow.
So we're not, hard to comment on when there's really nothing to do in front of a few red events.
Hey, yeah, we got some big events.
But I mean, it was great. I thought it was great how we handled this neutrality today. All right. Thank you, Dream Team. Bobby Lara, welcome to F.A.C.E. Finally happening. How are you?
I am good. It's nice to finally be able to speak to you.
Yeah, nice to meet you as well. And I know you sent me a DM on Twitter that you're not as technical as we are, but the next big rush is your business, and where I saw some nice videos, etc. How do you get involved in the financial markets? Has it been a while? What led you in this direction?
So I usually joke and say I got into this by buying silver at the very top. And so it was a tough lesson because my first array into trying to make money out of anything seemed like a great success at the time for, maybe 9 months. And then it just slowly tore me to pieces. Obviously, at the time, I was in my early 20s. And so it didn't hurt as much because I didn't have that much money to put on the line to begin with. But in looking at the narrative versus what was actually going on with the price action of silver and gold prices, I realized that obviously narrative is not enough. It's a big part of it. And there are a lot of people that can make big money with narrative as long as they got their timing decently correct.
Right.
But it was right at that turn. And so as things turned, I realized that the mining sector is actually where I found my home, you could say. And this is what I've been doing, since then, investing in. I actually prefer the term speculating in the mining sector
Yeah, that's a better, more accurate.
It really
That-
is.
that-
It really is. Due
Yeah.
to the nature of mining, it is such a tough science. In some instances, you could barely call it a science, right? There are so many unknowns that it's very easy to get caught up in just the narrative, or to read the sentiment wrong and to not understand where you are in the cycle. And so started with mining right after, I saw all my losses in silver. I actually did not sell most of my silver. I still have the coins somewhere in a drawer. But it taught me a great lesson of, yes, things go up, but things also come down. And so I've been doing that ever since. And the next big rush, I guess it's a brand that I've built around the mining sector. And I try to bring daily news of the mining sector to people who are invested in the mining sector or would like to, start investing in the sector. And it's wild. You can have the whole market come down with sentiment or with basically the price of the commodity, and you'll have a few projects that are absolutely killing it because they're going from, we don't have any gold or silver, to yes, we have some gold and silver. And so that leverage is something that's quite exciting.
Yeah, I want to talk to you about that. Do you know what Mark Twain, how he defined a mine? Mark
Yes, a liar on top
Two
of
liars
it.
standing over a hole. So anyway, you're right. There's lots of holes you could fall into. So is it true that you want to avoid miners when they decide to begin a mine during that time period, that they're more under pressure and it could be good for them longer term, but there's more risk when they're starting a new mine? Is that correct?
I would tend to agree with that. We have a recent example in a company called Pure Gold. And it hurts my heart to say this because it was the darling of, I think, 2018, 2019. Everybody
What's the
was
name of the
Pure Gold.
company again?
Pure Gold. It's
Pure
in Canada.
Gold. Okay.
Yeah, Pure
Okay.
Gold in Canada. And it turned out that there were enough technical details about it that weren't right. And they actually raised the money, got, to a very high price, a very decent market cap. And I think they got up to $1 billion. Don't quote me on this, but I think they got as far as a billion or $500 million market cap. And they have just recently been sold for, 30 million or something like this. It didn't work out. And this was, a good team behind it, or so we thought up until that point.
What was the problem? What was the problem with them?
So the problem in and of itself was where the veins were and how much it cost them to actually get to the ore versus waste, right? And this is what people need to understand. I think the first thing to understand is, where are you investing? Are you going for, those junior miners who really shouldn't be called miners at all, who are still looking for the mineral?
Exploratory.
Exactly. So you have the explorers and you have early stage versus late stage explorers. The late stage explorers, they have delineated a resource and they need to figure out, is it something that will be worth building or not, right? So that's the question that they're trying to answer. But then when they're developing it, if it's the same team, you have a problem where it takes a lot of specific technical knowledge in order to delineate the resource in the first place. And those are usually not the same people who can actually mine the stuff out of the ground. It's more of an engineering leadership. And then on top of that, you have third-party companies that come in and try to help the company envision what they have in the ground. And it's partly guesswork, right? We find minerals by drilling holes as if it were the 1800s. And we were trying to dig holes around a large enough area where we can say we can build a mine, and you need to have high enough grade, close enough to the surface, or you need to use a mining technique that will be cheap enough for you to extract it at a profit. And if you get enough of these things wrong, then you end up with a resource that's not economic. And that also depends on, is the problem that you don't have the gold that you thought you had because you drill one hole here and one hole here, and you're assuming there's gold between those. That's one mistake that can happen. Third-party companies, sometimes they are a little bit optimistic in what they're finding in their geological models, and that could happen. And so when a third party says, hey, you have this much gold and you're going to make a bunch of money from it, it's very easy to take that at face value and not, ask for a second opinion or contact somebody who's in mining engineering and see what literally the holes are, because there are usually many. Now, what I like to do is grab the late exploration stage when we already have an idea of the resource that we have, but we're not too close to going into production. Because when you try to go into production, yes, all sorts of bad things can happen.
Okay, so late stage before they go into production. And, there are juniors that are, like BTG and gold mine, talking about a gold miner, that they're producing. There's less risk, right? Unless something happens at one of the mines.
Absolutely.
They could still lose money. There's factors like energy that come into play, the cost of production. But aren't most of the gold miners making money above 1,000, 1,200 gold? They're printing money right now.
A lot of them are, and gold today is what, 2,000 or just under $2,000 per ounce. So at that level, if you have a mine that doesn't make money at this level, that is a massive red flag. That means that it's probably going to be in the back burner for a couple of decades or several years. Most miners can make decent cash right now. I do believe that in general, producers, their weakest point at the moment isn't even the fact that they're making money. They're making decent money. It's the fact that their exploration pipeline is very thin. So we've had, I guess you could call under exploration or a lack of investment in exploration for such a long time.
Oh yeah, isn't that really that's been going on for a long time, trying to open a mine. And it's not just here in the US, it's global.
It's everywhere. It's absolutely everywhere. Nobody wants a mine in their backyard. Mostly.
I wouldn't mind.
I wouldn't mind, but we're made of different stuff, Dale. We're at a different playing field altogether.
I would go up and down the shaft and
absolutely. We'd probably get stuck in there and become very famous very quickly. But other than just the whole NIMBY way of thinking of, we don't want mining close to us, there's just the natural permitting, not just in the US, but most of the Western world. It will take you a good, 10 years from first discovery of mineral to actually getting the mine permitted and then producing. You have so many stages that you have to go through.
So we're going to have shortages of everything. And what I gleaned from you when I've read your stream is that you favor right now, or you have a long-term bullish view on uranium.
Uranium, absolutely.
Am I reading it correctly?
Yes, I'm the uranium girl.
You're the uranium girl. You're glowing on camera right now. Tell us why. Is it really about the energy crisis and that we're really not going to have many options besides nuclear, and uranium is underinvested? It's a mixture
of many things. Those are absolutely correct. So it's a mixture of the fact that as humans grow in number, and also as we grow in wealth, we will need more electricity all over the globe, period, end of story. So it used to be that we could get away with doing things on paper and, in a more analog way. That has quickly shifted, especially after COVID, and the fact that everybody needs to, work from home, and then you got to buy a new computer. What's in that computer? A lot of minerals, or people driving to and from different places, people going back to their normal way of living. And the fact that my generation, for instance, values experiences and traveling a lot more than they do owning homes and cars and everything. It means that we need to be more mobile. We're using a lot of oil. Oil is painfully underinvested right now, infrastructure wise. And so the same goes with mining, right? Because the regulation and the permitting hasn't caught up with the needs that we have. And so with uranium specifically, you have a generation that is hungry for electricity. You have China and India and all of these countries where their population is in part due to the internet growing in wealth. And, when all you have is maybe a bicycle, the next thing that you want is a motorcycle. From that, you want a car. And you know what? For that car, it might be that by the time that people are buying into more cars in India, that they're buying electric cars and not, ICE vehicles as we know them. And electric cars take a lot more copper. And so everything is necessary. But specifically, the reason why I like uranium is when we talk about copper, cobalt, etc. Yes, there is likely going to be a shortage of them. And when we say shortage, anything can be done at the right price, right? And so I do believe that for all these minerals, we will have to just simply pay more for them. And a lot of them don't have, an alternative metal. And so we will have to pay more for copper. We'll have to pay more for nickel, cobalt, etc. The thing with uranium is that it has been, because of Fukushima back in 2011, that disaster in Japan, the prices got so low that no production came online. And what we see today is something that we don't see everywhere else. So bear with me for a second. When we talk about more copper, it increases with the amount of items that we're producing. So if we, instead of making an old car, with X amount of copper, we're making an EV with, let's say, 3 to 4 times as much copper. Okay. The thing with that is we can look at the demand and supply, and we can sort of guess where it's going based on, growth curves, etc. With uranium, not just do you see the highest amount of new power plants being announced, planned, and built than we've ever seen. This has been a movement for about the last 2 to 3 years. And so you look at the United States want to triple capacity until 2050. You look at China doubling their capacity until 2030. You look at Poland, you look at different places in Asia, the Middle East also going in very strong. Whenever that happens, you have to take a look at something that we call underfeeding and overfeeding. So basically, when you have uranium, and I'm oversimplifying this because it will take too long to get into the technicals, and it doesn't matter.
That's okay. I'm a simpleton.
when you take uranium, right, in yellow cake, you have to make it go through a series of different processes until you actually get the nuclear fuel. You don't just take uranium and put it into a nuclear power plant. Now, one of these processes is basically enriching. Right? When you're enriching the uranium, you're taking out, all the waste and all the parts that, don't actually make the reactor go anywhere. And you need a concentration of uranium that is fit for that particular type of nuclear reactor. Now, in that process, what used to happen, call it a year, 2 years ago, is because the demand for uranium was quite mild, and because, people stopped buying way back when Fukushima happened and they were living off their stockpiles and everything, they had enough supply. What was happening is you had a low amount of output, the same capacity. And what you did is you also needed a low amount of input. How does that work? Say you're taking oranges and you need enough orange juice to make a cup of orange juice. Well, if you have capacity and a lot of time to fill that contract, then what you do is you just basically squeeze it more and more and more and more. And so the time that you have in order to make good on that contract makes it so that you don't need that much orange material in order to make the juice, because you can just squeeze it a little more and you have time to squeeze it a little more and squeeze it a little more, right? What we have now is the opposite. So there's more demand than the last couple of years by a lot.
And everything's squeezed out.
And everything is squeezed out. And so you need more input at the beginning of your process in order to get the same amount of orange juice or nuclear fuel. And so it kind of exacerbates the need for more uranium. So it's that kind of lever of when things are bad, they're really bad. When things are good, you cannot build nuclear enrichment capacity quickly enough to make up for the fact that, you need more and more and more and more output. And so what you do, you have to get more, uranium into your system. So it's not just, the fact that, yes, more uranium is being needed and more contracting is starting to pick up. Right now, I think we have 88 million pounds of contracted uranium for the year of 2023 already in the books. And then last year, you had 100 million for the whole year. So we're at 88 already versus 100 million for all of last year. So you see utilities coming back to the table and contracting more than you did the last couple of years. But not only do they need more material, the enrichers need more material to actually make the same amount of output. And that's what's really exciting about uranium.
Okay,
and everybody hated it for so long that it got excited.
Yeah, so it's the next big rush. Okay, and this I'm showing your website and some of the videos you've made. Does uranium have the same issues about jurisdictions? I know a lot of people don't want to own gold that when mines are in certain areas geographically,
it's
fear of
even
nationalization.
Worse. So with uranium, it's even worse because it's radioactive material.
Right.
And
that, I can imagine.
Even if it's not radioactive, when you go into a mine, people don't care, right? The governments need to not only have their safety regulations in place, they need to make it look like it's safe towards, the population. And so with uranium, you have longer permitting times. And so it's even harder to get a permitted, ready to go uranium mine compared to copper or gold or anything else, which means that there hasn't been really any supply for the last any amount of years. And so this actually makes the case even stronger because new supply is not going to come online anytime soon. I'm looking at projects that should be close to being financed, and their economics just aren't good enough for them to be pumping out more uranium. And so the price of uranium has just started to pick up again. It was as low as $18 per pound. It reached as high as 60. And now, we traded sideways in the 50 range, the low 50 range for a very long time. It really looked like it wasn't going to go anywhere. And now we've just broken out. And so we're at 53.50, I think, today. And so we do believe that, this breakout could be the start of something really exciting.
Could I ask you something for me?
Ask away. Ask anything.
I'm pretty bullish at platinum. Do you know of any platinum mines? Are there any public companies where you could participate in platinum that's not in Russia?
That's a big question. Not in Russia. So I believe that Bravo Mining has a platinum and palladium component. It's worth looking
Where's that
into.
traded?
They're traded in Canada, located in Brazil. Now it's good to check if they actually have platinum. Platinum usually occurs as one of the minerals
byproduct.
Exactly, inside an ore body. I don't remember seeing it on its own, so it's usually mixed with something. I really like I'm not associated with the company and I don't even own their stock yet, but I really like the team. It's the kind of team that has actually built something good before, and they're trying to do it again. They got a project that was kind of, forgotten by a major mining company, and they've been able to, so far drill that stuff out and find the good stuff. I know that they were finding lots of nickel. I don't know if, platinum and palladium is part of that, but it's something that you should look at. There is also a uranium company that, let me check. There's a uranium company that wanted to spin out their PGM. It always escapes me the name of this one company. There's a company that's just
So
sold
is
premium
it, do you have
projects.
do you have a like a paid newsletter? Are you looking for subscribers? What's your business model?
Okay, so my business model is that whenever I find a company that I'm happy to be associated with and that I would, myself buy the stock, if they like, my work and the exposure that I get, then I get
see.
sponsored by the company. And obviously I disclaim every time that I look at the company. And what it allows the company to do is basically every single time that they have news that is
Yeah.
interesting and important, then they
It's
come
like
onto my
you're an
show.
IR. You're an
Yeah,
IR person
exactly.
for them.
Exactly. I let more people know what's happening with a company. And so in
Okay.
mining, it's very, very difficult to get people's attention, especially if you're not getting absolute crazy headlines for
yeah.
drill results. And so you might be getting drill results that are good, but they're good in the context that you're building. And so the headline sometimes doesn't get enough people's attention. And so what I do is I work with these companies to show people what's happening and to let people
Okay.
understand that, this result doesn't look like much, but in the whole context, it's really interesting. This is why I think it's undervalued, et cetera, et cetera. So that's my business model.
Okay. Well, this interview to me is like mining because you're a discovery. All right.
I'll
So
take that as a good thing.
you've been discovered, Fabi, and I really think that I'd love to keep in touch with you and have you back. And I'm very impressed with your knowledge of a very difficult area to be able to explain to the general public. So
Thank you very much.
you're now my trading warrior sister.
Awesome. I'll be happy to
right.
come back. Thank you very much. And by the way, people should go and follow me on Twitter if they want the
Yeah.
name of the company that also has
At the next
wow.
big rush.
Yes, at the next big rush. And
Yeah.
I'm not doing this as a marketing trick. I just seriously cannot find the name of the company. So this is it.
All right. So someone who puts her money where her heart is. How about that?
Absolutely.
So-
I win and I lose, and y'all get to see it.
All right. So Fabi, great meeting you, and I appreciate you taking the risk of being on with me. And I knew it would be excellent, and it was.
Not a
Thank you
problem,
very
Dale. Let's
much.
do this again soon.
All right.
Cheers.
Thank you.
Bye.
That's Fabi Lara, everybody. And that's a wrap for us here today. And you could join the team in, let's see, 17 minutes on the morning edge. Don't just count your pips. Come on. What are you supposed to count? That's right. Count your blessings. See you, Mandy. Adios, everyone.